June 12th, 2026, 9:30 in the morning, the NASDAQ Stock Exchange, New York. A company called SpaceX is about to start trading. Listing a company on the stock exchange is nothing new. But this time, something happens that has never happened before in human history. In the very first second of trading, Elon Musk becomes the first trillionaire on Earth. $1 trillion, 12 zeros behind the one. An amount so large that if you spent $1 million every single day, it would take you more than 2,700 years to spend it all. Today, Elon Musk is the richest man alive. His wealth is so large that if you added together the net worth of the next 4 richest people in the world, it would still fall short of this one man. But here's what nobody is telling you about that number. Behind it is a story about how the stock market really works, and a game that might change how you see wealth altogether. Let's break it down. First, you need to understand just how big trillion really is, because the human brain isn't built to process it. Think about it in time instead of dollars. Go back 1 million seconds and you land about 11 and a half days ago. Not long at all. Go back 1 billion seconds and you land 32 years in the past, before a lot of us were even born. But go back 1 trillion seconds and you land 31,000 years ago, before human civilization as we know it even existed. Today, only 21 countries on Earth have a GDP larger than $1 trillion. Elon Musk's net worth has now crossed that same number. So how was this number actually calculated? According to Forbes, Musk holds about 38% of SpaceX, and SpaceX's valuation has reached $2.2 trillion. Add in his 15 to 25% stake in Tesla, valued at over $1 trillion, and you get his trillionaire status. But here's the catch, and this catch applies to every billionaire on the planet, not just Musk. This wealth isn't liquid. It's not sitting in a bank account he can spend. It exists entirely as shares in these two companies. Musk himself has said that only about 0.1% of his net worth is in cash. That's roughly $1 billion out of $1 trillion. If he actually tried to sell his Tesla or SpaceX shares, the sale itself would crash the price. A flood of shares hitting the market signals to everyone else that something is wrong, so other investors pull out too, and the value collapses. In other words, most of this wealth is a number on a screen, dependent entirely on what other people believe. Now here's the deeper question. Is SpaceX actually worth $2.2 trillion? Last year, SpaceX was valued at $400 billion. Now it's $2.2 trillion. But in that same year, SpaceX didn't do anything to justify a 5-fold increase. In fact, the company posted a $5 billion loss in 2025 and another $4.28 billion loss in just the first 3 months of this year. The research firm Morningstar puts SpaceX's actual value closer to $780 billion, only about 35 to 40% of its current market price. So why is the price so much higher than the fundamentals suggest? The answer is Elon Musk himself. People aren't investing in SpaceX. They're investing in Elon Musk's dreams. Economist Burton Malkiel, in his book A Random Walk Down Wall Street, describes 2 theories of stock valuation. The first is the firm foundation theory, value based on real earnings and real profit. The second is the castles in the air theory, value based purely on psychology and belief, disconnected from performance. Musk's companies are built almost entirely on the second theory. They sell dreams, a human settlement on Mars, fully autonomous robo-taxis, data centers in space, and people buy the dream instead of the balance sheet. Harvard Business School professor Mihir Desai has described this as a kind of financial cult. The belief that if Elon Musk's name is attached to something, it will succeed, regardless of the actual product. Look at the track record though. In 2013, Musk proposed the Hyperloop, a transportation system that would move people at 600 miles per hour, promising a 30-minute trip from Los Angeles to New York. By 2023, the company built around that idea had shut down, having never delivered a working product. In October 2015, Musk claimed Tesla would have fully autonomous self-driving within 3 years. That promise has been repeated in various forms nearly every year since. 11 years later, fully autonomous driving still hasn't arrived. In 2017, he proposed the Boring Company, tunnels under highways to relieve traffic. What resulted was a 2-kilometer tunnel in Las Vegas, which itself now experiences traffic jams. In April 2019, he said the world would see over 1 million robotaxis by the following year. That never happened. In June 2014, he said humans would reach Mars within 10 to 15 years. That hasn't happened either. This is why Steve Eisman, the investor who famously predicted the 2008 financial crisis, has called SpaceX's valuation madness, saying it's unheard of for a serious company. In his words, it's less like an IPO and more like a science fiction story built for a science fiction audience. Now let's talk about how billionaires actually live, because it explains a lot about how this wealth escapes taxation almost entirely. It's a strategy known as buy, borrow, die. Step 1, buy shares and never sell them. Tax only applies when you sell, as income tax or capital gains tax. So the wealthy simply don't sell. They let the value rise, tax-free, indefinitely. Step 2, borrow against those shares instead of selling them. Banks offer extremely low interest rates to the ultra-wealthy because the shares serve as collateral. According to a report by the International Financing Review, Musk has pledged roughly 1/3 of his shares, about 236 million of them, as collateral for loans. When Musk bought Twitter in 2022, he pledged $62.5 billion worth of Tesla shares and took out a $12.5 billion loan in cash. He got the money. He didn't sell a single share. He didn't pay a cent of tax on it. This is also why many billionaires publicly take a salary of just $1. It looks humble. In reality, it's a tax strategy. They're not avoiding income, they're avoiding taxable income, while still funding their lifestyle through loans or company-covered expenses. The numbers make the imbalance clear. Between 2014 and 2018, Musk's wealth grew by $13.9 billion. In that same period, he paid $455 million in taxes, a real tax rate of just 3.2%. Compare that to the average working American, who typically pays 20 to 30% of their income in taxes. And Musk isn't an outlier. Between 2014 and 2018, the 25 wealthiest people in America paid an average real tax rate of just 3.4%. Step 3, die. Under U.S. tax law, when the shares pass to heirs, the capital gains built up over a lifetime are effectively erased, a rule known as the stepped-up basis. The loans get paid off with a small portion of the inherited shares or by the bank itself, and the rest passes on essentially untaxed. For most billionaires, the story stops there. Buy, borrow, die, repeat, generation after generation, almost entirely outside the tax system. A lot of people admire billionaires like this, assuming their wealth was earned purely through hard work and vision. But when you trace the mechanics, the picture looks different. The wealth is largely paper, built on belief rather than earnings, kept out of the tax system through borrowing instead of selling, and passed down almost tax-free. So here's the real takeaway. Don't mistake hype for value. Paper wealth built on belief can evaporate as fast as it appeared. If you're building your own financial future, look for real fundamentals. Real revenue, real profit, real earnings. Not just a compelling story. And the one asset that never gets diluted, never crashes with the market, and can never be taken away by a shift in sentiment is what you know and what you can do.